Hello, today we've had news that the interest rate has reduced from 5% to 5.25, and people are asking me, of course, how's this going to impact the housing market? So again, quick 2-minute video, just to give you my insights with my 25 years experience. God, I'm old. It's obviously positive news for borrowers. Although the reduction isn't enormous, it's going to be helpful. Now, immediately, the vast majority of mortgage lenders aren't going to feel an actual change immediately, because people who currently have mortgages, the vast majority, over 90%, have fixed rate mortgage products, which then when they go to remortgage, it's going to be beneficial, but immediately there's no direct change. So there's a small minority of mortgage holders that will feel an immediate benefit, and their mortgage rate will, their mortgage repayment rate will change literally from the next repayment. So that's people on track of variable mortgages rather than fixed rates. The positive news, of course, though, is for buyers coming into the market. Now, the mortgage rates, there's not been like an immediate drop in mortgage rates because most of the lenders had already anticipated that this reduction would be coming, so it had been built in and baked into the mortgage products that are available. But it generally raises overall confidence in the market, and the activity in the housing market does see a direct correlation to the interest rates. So that activity is come at a very interesting time, because of course the government recently had their budget, and then we go the doom and gloom. Oh, great, we've had a reduction. So it's kind of like just bringing the market back to where it was, which was in a strong, stable, healthy place. I am anticipating, so the market quite right now, it's the beginning of November, it's actually relatively calm and quiet, so there's not a huge amount of buyer or seller activity. That's obviously seasonal and expected, it being November, and then coming into December we'll expect that. I am, however, as a business, I'm recruiting because all the indicators are for the market to be extremely strong next spring. So I'm recruiting now because I know that I need people, they need to get some experience, get their feet under the desk, etc. before, in anticipation of this boom next year. I wouldn't say it's going to be a hedonistic boom, I just think it's going to be a high energy market. And like I say, there are all the indicators are pointing towards that in terms of, economic stability. Of course, there could be blooming pandemic, or they could be World War III could break out, so of course we can't guarantee anything, but like I say, the lead indicators, employment levels, the availability of finance, these are the big things that drive the markets, and the lenders are all desperate to lend. They're all very liquid at the moment. They've recently changed the lending parameters at an EU level so that banks can lend a higher percentage of the money that they hold on account as mortgages. The lending criteria has been reduced as well, so first-time buyers are finding it easier. But in addition to that, because of all the measures that are anti-landlord, there's a huge pressure on rental stock, meaning that rents are astronomically high, which means that a lot of people now, with these reduced interest rates, are going, why are we paying £1,500 a month for this grotty house? I could pay that much on a mortgage and get a significantly better house. As long as they can get the deposits together, a lot of people who would be renting are choosing to buy just so that they can have some control over their own destiny by way of housing. So yeah, is it a good thing? Of course, for the housing market, it's really positive. 4.75 is still lower than the 50-year average for interest rates. So it is a low interest rate, but of course it doesn't feel like that, having come off 10 years of extremely low interest rates following the global financial crisis. Anyway, I tried to keep it short. It's been 4 minutes already, so apologies for that. Any questions, of course, reach out in the usual way.